A government-owned lender set up to drive regional growth now has more than half of its loan book at risk of default. Now, the value of this loan book, a staggering $433 million, almost $500 million. It's our money. Crown Regional Holdings was born out of the Provincial Growth Fund era, backing projects that private banks basically wouldn't touch. But new figures show a growing number of those loans, including many under the Regional Infrastructure Fund, and potentially are in trouble. So let's go now to the man who's been working on this story, Matt Nippert, business investigations reporter with the Herald. Matt, good morning.
Oh, good morning, Ryan.
So what's actually going on here? What's new in this information you're giving us this morning?
Well, each year, government agencies need to put out annual reports. It's quite interesting, sort of quasi-financial outfits have to give an accounting of sort of the risks that they face. While the economy generally has been doing it tough over the last couple of years, it's fair to say an entity that was making loans to entities, to businesses that wouldn't be able to get money from the bank are at higher risk. And we've sort of seeing things even more painful there than we would say when the mainstream banks put out results. So we've seen a steady increase in impairments, and it's really a sign about how bad things have got.
Right, and so when you say impairments, what are we talking about?
Oh, loan write-offs. I mean, it's where if you lend someone money and expect to get it back, each year you account for it and say, yeah, I'm going to get all that money back. When you realise that the lender won't be able to meet those terms, you need to make a provision. And that's effectively what I've been particularly interested in tracking. But more interesting with the Crown Regional Holdings, which is this sort of omnibus entity that holds all sorts of funds, mainly given out by Shane Jones when he's been in government at various times, the Provincial Growth Fund and the Regional Infrastructure Fund. We've seen the reporting of the loans, whether they're actually in default, i.e. they haven't made payments, or they're at risk of default, has increased pretty regularly, and now it's over half the loan book is flagged as at risk.
How unusual is that for a lender?
Well, I mean, if it was a bank, there'd be huge questions. I mean,
you'd be in real trouble, wouldn't you?
Well, if you're writing off 5% of your loan book each year, you'd be very quickly turned out by your shareholders. However, this wasn't exclusively a business proposition. This was supposed to be investing in the regions which couldn't get funding in other ways. So you can understand why they were making it. But I mean, I guess we're now seeing why they couldn't get funding from banks.
100%. So how much of this could they turn around and say, well, this is the general economic malaise and the situation that the economy is in, as opposed to anything specifically wrong with these entities?
Look, I've talked to Shane Jones a number of times about the scheme, and he's been not defensive at all. He's saying it's working as advertised. It's money going to the regions, but.
As in, like, who cares whether it's working or not? And with
well, I'm sure the finance minister does. But a lot of these loans had very long repayment horizons. I think there's some work done by my colleagues at Business Desk that looked at the original Provincial Growth Fund, which is a couple of $100 million, and actually, almost 10 years on, less than 10% has been repaid. Part of that was due to they were given quite generous repayment terms and weren't expected to repay until 10 years down the track. So these are very unusual loans from a commercial sense.
Matt, what types of businesses are we talking about here?
Well, there's a whole range, obviously mainly in the regions. Big pots of money have been thrown at the Bay of Plenty. I've been looking particularly at a mussel farm in Apotiki that has just made progressively larger losses each year with the additional capital it's got from government. That was also bundled alongside that. They also spent over $100 million upgrading the harbour, building a new wharf, supposed to help the mussel farm, but the mussel farm just seems to be in a bigger and bigger hole. There's also another big chunk of spending in Northland for some reason, which is also Shane Jones' electorate.
Very curious that, isn't it? Matt, appreciate your reporting this morning. Thanks for updating us.
No worries, Ryan.
That's Matt Nippert.